All right, have you ever looked at a stock chart and all you see is just a bunch of random squiggles? Well, what if I told you that every single one of those little ups and downs is actually telling a story? Yeah, a story about ambition, about fear, about some really smart decisions, and some pretty costly mistakes. So today, let's learn how to actually read that story. We're going to follow the footprints of the smart money. Okay, so our story starts with this guy, Jim. He owns a company called JCB Superstores, but honestly, things are not going well at all. His main competitor is just eating his lunch, you know? The business is bleeding money, and Jim is in a really, really tough spot.
But Jim, he's not a quitter. He knows he's got to do something bold, something really big if he's going to turn this ship around. And then bam, it hits him. He comes up with this totally game-changing plan.
So what's this big plan? Well, first, Jim decides to go public. Now, that's just a fancy way of saying he's going to sell off tiny little pieces of his company, we call them shares, to a whole bunch of people. And with all that cash he raises, he's going to buy out his competition, open a ton of new stores, and because he's so much bigger now, he can get better deals and lower his prices for everyone. It's a classic growth strategy. Okay, so this is where our second character comes into the picture. Meet Tom. Now, Tom is not like most people. He doesn't just gamble on the stock market. Nope, he's different. He's what we call the smart money. See, Tom doesn't guess, he investigates. You can think of him as a kind of financial detective.
So what exactly does a detective like Tom do? Well, he's not just sitting around reading news headlines, that's for sure. He actually gets out there and pounds the pavement. I mean, he literally goes to Jim's stores. He sees for himself that they're packed. He talks to customers who seem really happy, and he even chats with the suppliers. Then, he goes back to his office and just dives deep into the company's numbers. It's only after doing all of that homework that he figures out what he thinks the company is actually worth.
And this is where things get really interesting. Because when the news of Jim's big expansion plan gets out, all the so-called experts on TV, they start to panic. They're all saying, this is a terrible idea. It's a horrible time to expand. But Tom's detective work, well, it tells him a completely different story. He trusts what he saw with his own two eyes, a healthy, busy, growing business.
So, while everyone else is panicking and that fear is driving the stock price down, Tom sees an opportunity. This is his opening. He tells his team, start buying. Buy every single share you can get your hands on as long as it's under $10. He's just calmly collecting what everyone else is throwing away in a panic.
So, a few months go by. And you know what? The economy doesn't crash like all those experts predicted. And then Jim's company, JCB Superstores, releases its new sales numbers. And they are fantastic. Just like that, all of Tom's hard detective work pays off. Big time. The stock just soars. It doubles in value. Think about that. For every single dollar Tom put in, he now has two. And that is the reward for doing your homework, right? For having the courage to go against the crowd when everyone else is running for the exit. So, happy ending, right? Story's over? Not even close. So yeah, years go by and the stock does great. But a good detective, they never really close a case. Tom knows that things can change, and he's got to keep his eyes peeled for any new clues. And sure enough, he starts to find some. He goes back to the stores, but this time, things are different. He hears customers complaining. He notices that the big advertised sale items, they're not even on the shelves. So he starts digging deeper, and he uncovers this massive problem. JCB just grew too big, too fast. Their whole system, their distribution, it couldn't keep up. They couldn't even get products to the stores on time. Okay, so based on these new pretty troubling clues, Tom makes another huge decision. It's time to sell. He tells his team, we're out. Get rid of the investment as long as we can get this price for our shares. And here we go again. We see that exact same contrast play out. You've got Tom, the smart money, who's quietly selling everything based on his new research. But then you have the crowd, the novice investors. They're just looking at the price, right? They see a little dip and they think, ooh, what a bargain. And they start gobbling up all the shares that Tom is so eager to get rid of. So Tom and his team, they manage to sell off all of their shares. Just as the stock price recovers a little bit, they are completely out. And then the rumors start. The news about JCB's huge problems starts to leak out to the public. And the stock just plummets. All those investors who thought they were getting a bargain, totally devastated. But Tom, our detective, he's safe. And why is he safe?
because he followed the clues, not the hype from the crowd.
Okay, so here is the whole point of this story. All of Tom's actions, his quiet buying when everyone else was scared, and his quiet selling when everyone else was getting greedy, all of that left a trail. It left clues right there in the stock's price chart. And that is what we call investment footprints. They're basically the evidence that the smart money leaves behind for us to find.
And look, this isn't just some made-up fairy tale. Take a look at this. This is a real chart of the S&P 500, which tracks hundreds of the biggest companies out there. Every single move on this chart tells a story. You see that long, steady climb? That's the footprint of millions of investors all feeling optimistic. And that sharp, sudden drop? That, my friends, is the footprint of fear. It's the collected story of millions and millions of people making real decisions with real money.
So why does any of this matter to you? Well, it's because if you can learn how to spot these footprints, they can do two incredibly important things for you. First, they can point you toward a huge opportunity, right? Like when Tom was buying JCB for $10 a share. And second, and this is just as important, they can be a massive warning sign that you are walking straight towards a cliff.
And this is a powerful real-life example. This quote comes from the author of our source material. He tells this story about how he sold all of his shares in Alaska Air because he saw some of these warning signs, these footprints in the chart. And get this, he sold just 2 trading days before the September 11th attacks. 4 days later, the stock was cut in half. Now, the footprints didn't predict the event, of course not, but they did lead him away from a financial disaster.
All right, let's wrap this all up. What's the big takeaway here? First off, investing charts aren't just random squiggles. Second, the smart money, the detectives like Tom, they always leave clues behind. Always. And learning how to read those clues is a seriously powerful tool you can add to your own toolkit. And maybe the most important thing is this: you can learn to be a detective too.
So the next time you look at a stock chart, I want you to do something for me. Don't just see a line. Ask yourself a question. Who is making these footprints? Are they walking towards a new opportunity? Or are they running away from a cliff? I'll just leave you with this thought. What story are the charts telling you today?